Welcome back to Morning Trade Live. We go inside out on big tech hitting new highs, communication services new highs. This area has certainly been a bright spot again and again. Every time we fall off, it's tech that seems to rescue us. Angelo Zino, senior equity analyst at CFRA Research, is with us. You know, those mega caps, those Mag 7, they do it again. Tell me what your thought is on this group. I do want to get to, obviously, Alphabet reporting, but these mega cap names, what are we watching for here as they report over the next couple of weeks?
Yeah, so Nicole, and thanks for having me. Yeah, overall, I think when you look at just tech in general, off the April lows, we're talking about a move north of 45%. So I'm hoping expectations aren't too high in terms of a stock price movement off these numbers here. But our view is, listen, you're going to have a beat and raise essentially from each of these names if you expect them to have positive movement, at least on the actual print themselves. But that being said, the secular opportunities tied to each one of these names remain extremely impressive. I think the talk, the hype around AI will continue to gain momentum. I think you'll hear a very good story from each one of these names this earnings season among kind of the Mag 5 names that I cover. And I think that'll at least, even if you get any type of pullback on some of these names, I would use them as buying opportunities because of the opportunities we see specifically into 2026 and 27.
So that goes for all of these big tech names. We were just showing the names that are reporting. You have Google tomorrow, Microsoft and Meta on the 30th, and then Apple on the 31st. On dips, would you be buying all those names?
Those are all names that we do like. I mean, when you start thinking about the Mag 7, I think the only one that we aren't recommending at this point in time is Tesla. That's covered by my colleague, Garrett Nelson. But among those names that you just referenced, yeah, I mean, those are all names that we like. I mean, some more near-term oriented. I'd say when you look at Microsoft, when you look at Meta, and you look at Nvidia, those have been the three power names that have really worked here off the April lows. Rightfully so. They are the cleanest stories as far as the AI stories are when you look at them. And then, when we look here over the next couple of quarters, those are names you have to own. I would say the one with the most upside in terms of relative to consensus expectations has to be Nvidia, especially after what they just announced, that win entry back into China. Of course, they are off peak, but when you look at specifically Apple and Alphabet, those have been the two out of favor names among kind of the Mag 7 names that I cover. Apple, more of a 2026 story because we do think they get the AI story right. You're going to have foldable devices. We think those glasses potentially late 2026. So there is a story here for Apple. You may have to wait a couple of quarters for that to start working out. And then Alphabet, really, they are a bit of a special situation play because by the end of the summer, we do expect to hear the court remedies from that search monopoly case. And hopefully, as long as we avoid a worst case scenario, that kind of removes a potential dark cloud from this company and hopefully kind of gets the stock to continue to work, which it has been over the last 30 days or so.
Since you mentioned a few of them, let's talk about Alphabet in particular, since it reports tomorrow. Right now, it's trading at 187. You do see potential. People say it's the most affordable name in the AI, big race group here. And you have a $210 target. What will be the catalysts, sort of 1, 2, and 3 that get this name above the $200 mark?
Yeah, so for us, at least as far as this earnings season is concerned, you've got that cloud business. We're looking for high 20s growth. If we can see an acceleration towards 30% growth rate that would exceed expectations out there, I think that would be a very welcoming sign out there for investors, and that is something I think that's very attainable given the upward lift that we've seen here from greater AI workloads from these more complex reasoning models. Not to mention you've also got Blackwell that has ramped here over the last couple of months as more and more of those kind of Blackwell GPUs get embedded within Alphabet's ecosystem. That's also a positive tailwind here for that cloud business. I'd also say, the other kind of spectrum that really drives this company is that the ad-based businesses. And then you kind of look at both search and YouTube. And as far as both those businesses are concerned, we're looking for at least high single-digit growth from those segments. But I think that when you look there is also upside to our expectations as well. I think also importantly, as we kind of go into the second half of the year, I think what's important to note is those expectations actually look more than attainable to us. So as you kind of get the ramp with AI mode, AI overviews continuing to improve the return ROI on their ad-based businesses, I think that should help kind of support just higher upside revisions to the street estimates.
Yeah, and so the cloud business is certainly something that gives Google the growth. Is there anything else that drives it? When I think about the drivers for this name?
As far as cloud itself, or are we talking about the entire company?
About the whole company, about Alphabet Google.
Yeah, I mean, I think cloud is kind of their, I'd say, primary growth engine at this point in time. And then I think you also have to look at that YouTube business, right? Because that you're now entering the third year of the NFL Sunday Ticket package over there, and not to mention, we do think they're going to start seeing more innovation as far as that partnership is concerned. I think that's a business that can start potentially seeing accelerating growth as well as they come out with new offerings. So I think that's the other part of the business. Combined, when you also look at the subscription offerings tied to YouTube, I think kind of cloud and YouTube north of 25% of their revenue. As you continue to see the upside revisions on those two segments, I think the street potentially throws a higher multiple to the stock.
I did just read how Google said it removed nearly 11,000 YouTube channels and other accounts for pushing state and sponsored propaganda that were linked to Chinese and Russian propaganda. So they did do a sweep. I guess they do sweeps often, and removed some of those. Also, last but not least, when I think about agentic AI, a cousin of mine actually said, AI scares me. I think it scares people because they don't really, sort of know what's next. In 6 months and 12 months, we see robots doing everything. But where are we on the agentic AI? Is that going to help us, and what names are leading in that realm?
So, I mean, the agentic AI kind of, evolution here, our view was 2025 was going to be that inflection, and that is what you're seeing here. 2025 and 2026 is where you kind of really see the ramp on the agentic AI universe, and it is going to be driven by, the enterprise, just a greater enterprise adoption. 2027, 28 is where we kind of see that physical AI evolution. But sitting here, just when we start thinking about AI agents, what AI agents are really doing, and what we've learned is, originally we thought it was going to be some of the software companies that could benefit, but it really is a lot of these chip makers that continue to benefit the most, because of these complex reasoning models are just driving an insane amount of compute. So it continues to be, our top call on that side now is AMD. It is a strong buy recommendation, so we do like it. Nvidia, the names that we've kind of highlighted in the past, right? Broadcom as well. Those names continue to work, but in this agentic AI world, we do think those names continue to work even further going into 2026. And then, of course, a name like a Microsoft and some of these other hyperscalers will, of course, benefit just based on what they are rolling out on the agentic AI side of things.
All right. Thanks for the preview there, too, of Google and everything, all these things, tech. Angelo Zino, always great to speak with you at CFRA Research. Always glad you're able to come on, especially as tech has been hitting record highs. It was a good breakdown there. Tom White is with us, host of Fast Market, taking us through some example trades. Let's start with Alphabet Google. Alphabet will be reporting tomorrow. Some of your thoughts on an example trade here. It's at 188 today.
Yeah, Nicole, looking to break that 9-session win streak. If it would have settled higher today, or if it does settle higher today, would have been an all-time record for Google Alphabet. This stock's made a nice run back. It's still off about 9% from those all-time highs that we saw earlier this year. And the valuation's pretty low on this one compared to the other Mag 7 names in this space. Everybody talks about AI and their search business, which they own about 90% of, getting taken away. So that's been the concern lately, but nice push here into earnings. The option market's pricing in about a plus or minus 5% move in the shares, just over $9 either way on this one. So I looked at a strategy that takes advantage of volatility dispersion, because implied volatility levels in the near-term options that expire this Friday are pretty elevated at this point. So I looked at a bullish call diagonal. If you think this rally is going to continue, they're going to beat earnings expectations. I went out to the August 1st weekly options and bought the 190 strike call slightly out of the money to the upside here. And then against it, about that 1 standard deviation move, sold the July 25th weekly 200 strike call. So a bullish $10 wide call diagonal. You're paying roughly, I've got a 440 debit on here. It's probably trading under $4 right now because the stock has pulled back with the overall market here. But the debit you pay is going to be your risk. It's a $10 wide bullish call diagonal that you're paying less than half the width of. So that price entry point and risk on this trade of about $400, it tells you that there's some volatility dispersion. In that August 1st weekly option that you're buying, the 190 strike call, you're buying about a 50% implied volatility on aggregate in that series, selling about a 75% implied volatility in the near-term options in that July 25th 200 strike call. So that vol dispersion creates a lower price entry point for this. You need the stock to go higher, though. You need it above about 192. That's only about 1.5% above the current share price in here. But this might be the way to look at it if you think the stock is going to continue to move higher. And because you're paying less than the width of the call diagonal, everything above about 192 is going to be profitability on this one.
Okay, so we'll see if it gets there and maybe even up to Angelo Zino's target of 210. Let's talk next about Meta, which will be reporting on the 30th of July. Tell us about your example trade there. It's at 701 now.
Yeah, stocks rallied over 20% so far this year, just below those all-time highs. So expectations are pretty elevated going into this report next week. So I looked at something a little bit more conservative that's still bullish, right? You're still taking advantage of a bullish directional bias on this type of trade, but giving yourself a better probability of success. So I went out to the August 1st weekly options. You're going to capture that earnings event. Implied volatility levels are elevated. I looked at selling an out-of-the-money put vertical, selling the 680 strike put, and then against it, because we want to stay risk-defined, especially going into event risk, such as earnings, by the 670 strike call. So a short $10 wide, neutral to bullish, put vertical. You're going to collect roughly about a $3 credit on that. That's what you can make, $300 per spread with $700 of risk, but it takes your break even all the way down to 677 over the next 10 days. That's about 5% below the current share price in there. So you got that cushion to the downside. The probability of that short 680 strike put being out of the money at expiration, about 65%. So that gives you an idea of what you're working with when you've got more risk than you do potential reward, but you're giving yourself that better probability of success where you can even be wrong, Nicole. The stock can go down, but as long as it stays above 677, this trade will be profitable.
Okay, Tom White, great to see you. Thank you for both of those. We appreciate those example trades that you bring us every day, and of course, Options Corner as well during the day as well. Catch Tom here all the time on Schwab Network.